If you consider yourself an investor and invest in stocks, you absolutely must know what a 10K filing is. So, if this sentence is currently reaching your ears and being processed in your brain, that means you're genuinely interested in the answer. In this video, I'll explain what this document is in the finest detail, and by the end, you'll understand how this document has led to companies like Tesla losing millions of dollars and even contributed to the collapse of companies like Enron. By the way, I've made a personal promise to teach this field to my viewers down to its finest details and help them grow into professional investors. That's why I've created a dedicated playlist on this channel. Make sure to check it out and watch the videos in sequence all the way through. Now, let's get started. In the US, every company listed on a stock exchange is required to submit a document called the 10K each year to the Securities and Exchange Commission, SEC, the regulatory body in the US. This document is considered the most comprehensive report on a company's operations over a full fiscal year and provides deep, transparent insights for investors, analysts, and other stakeholders. The 10K doesn't just outline a company's income and expenses, it also covers strategic directions, risk factors, and the management's perspective. This document contains several key sections. For example, the business section describes in detail what the company does, its core products and services, the markets it operates in, and its competitive landscape. The risk factors section lists economic, technological, and legal risks the company might face. The financial statements section includes the income statement, balance sheet, cash flow statements, and related explanatory notes. Another critical part is the management's discussion and analysis, or MD&A, where the company's leadership evaluates the results, discusses key issues, and outlines future plans. The 10K also contains information about shareholder numbers, stock distributions, board of directors, audit results, and more. Giants like Apple, Microsoft, and Coca-Cola present their annual revenue sources, segment earnings, debt structures, and strategic plans in hundreds of detailed pages within this document. The importance of the 10K lies not just in its information richness, but also in its transparency and legal reliability. Company leadership is required to share not just their achievements but also the difficulties they've faced, the mistakes made, and the risks anticipated in the future. For this reason, the 10K has special legal weight, and failing to submit it, as required by the SEC, can lead to serious legal and financial penalties. Some of the best-known examples of this include fraudulent cases involving Enron and Tesla. For instance, Enron's leadership deliberately manipulated revenue and debt figures in their 10Ks. They inflated revenues and hid debt using off-balance sheet entities, subsidiaries that were not shown on the main balance sheet. Eventually, the SEC and other federal agencies launched an investigation. Enron's collapse is considered one of the largest corporate frauds in U.S. history. The company completely collapsed, and its auditing firm, Arthur Andersen, was held legally responsible and lost its license. Following this scandal, the Sarbanes-Oxley Act of 2002 (SOX) was introduced, which imposed strict regulations to enhance the transparency of 10Ks and other financial reports. In Tesla's case, Elon Musk shared some unofficial updates on Twitter in 2020 about the company's operations and stock, but these risks were not clearly reflected in the 10K document. The SEC declared that this was material information that could significantly affect an investor's decisions, and said that such disclosures must be made through official filings only. As a result, Tesla and Musk reached a settlement with the SEC, paying a $40 million fine, and Musk agreed to restrictions on his Twitter usage. This incident perfectly illustrates how important it is for all risks to be fully and accurately presented in the 10K, and what can happen when they're not. For investors and analysts, this document is an irreplaceable source of information. It's not just about surface-level metrics. You'll also find strategic plans, market expansion efforts, R&D activities, and M&A intentions in the 10K. It also covers key risk factors like currency risk, regulatory changes, and debt obligations in detail. Each revenue segment, free cash flow, capital expenditures, and supplier or customer relationships are all presented transparently in this document. There are certain sections of the 10K that particularly excite investors. In the MD&A section, top executives like the CEO and CFO comment on the company's performance over the past year, which markets they plan to focus on, and which areas they aim to invest in going forward. This provides valuable insight into the company's strategy. On the other hand, the risk factors section is essential for making cautious and informed investment decisions. It discusses regulatory shifts, competitive technologies, commercial contract risks, currency fluctuations, and supplier issues. The financial Financial statements are direct tools for analyzing a company's financial health. The income statement shows key revenue growth, profit margins, and operating expenses. The balance sheet provides a snapshot of the company's assets, liabilities, and shareholder equity. The cash flow statement displays cash movement across operations, investments, and financing activities. Additionally, the notes section provides deeper context, such as debt maturity dates, interest rates, legal proceedings, lease obligations, and other critical details that may not appear in the main sections. From the 10K, investors can also calculate several key financial ratios. For example, the P/E and P/S ratios help evaluate the company's market value relative to its earnings or sales. ROE, ROA, FCF yield, debt equity, and current ratio help assess financial strength and overall investment attractiveness. I'll be explaining all of these concepts one by one in future videos in this series. To analyze a 10K properly, it's important to follow a certain order. First, read the business section to understand what the company does and its strategic markets. Then, move to the risk factors to grasp the nature of risks and their potential impact. In the MD&A section, focus on management's forecasts and commentary to track the company's future direction and major upcoming initiatives. Reviewing revenue and cost trends helps evaluate sustainability and margin stability. Cash flow and debt structure provide signals of financial health. Stable cash flow and low-interest debt are considered positive. Finally, don't skip the footnotes section. Critical but often overlooked details such as legal cases, commitments, and special arrangements may be hidden there. If you've watched the video this far, you've probably been wondering, where can we actually find and read these 10K reports? There are many sources, but the best place is directly on the SEC's official website via the EDGAR system. EDGAR is the SEC's official archive where all public companies' filings, 10Qs, 8Ks, and more are stored and freely accessible. On the EDGAR archive, simply enter the company's full name or ticker symbol in the search bar, select the 10K filing from the results, and read it in either PDF or HTML format. But remember, 10K filings are very long, often over 100 pages. However, they follow a standard structure. When reading, it's best to focus in order on the main sections we've discussed. If you'd like the direct link to EDGAR, I'll place it in the description below to make things easier for you. And finally, I want to let you know that I will personally respond to every comment that this video receives. So if you have any questions at all, don't hesitate to drop them in the comments section below.